Good afternoon, and welcome to the end of week market review for Friday, February 15th, 2013. In today's presentation, we're going to be covering a few things. We're going to be starting off by taking a look at the market news, as well as take a look at some economic reports. We're then going to go ahead and take a look at the S&P 500 and the Toronto Stock Exchange. While we're looking at these two exchanges, we're going to be looking at both daily and weekly charts on both short-term and long-term scales. We're then going to look at the volatility index, and finally wrap things up by taking a look at some great pick reviews. We could see that the S&P 500 ended up having a 7-week gain. The last time we saw these types of gains was several years ago. In fact, the S&P 500 was only up about 0.10% from last week's close, but it was still enough to push it up. The Dow Jones, on the other hand, is down. It is down 0.08% from last week. All in all, the markets had a pretty flat week. Today's losses, or mediocre tradings, was as a result of some negative reports that was coming out of Walmart. All in all, though, we can see that oil is still up 0.16% from last week's close, putting it to $95.77 per barrel. We can see that silver is down. It is down 5.32% from last week's close. This is going to put it at $29.79 per ounce. Gold is also down a fair chunk, with it down 3.55%. This is putting it to $1,609 per ounce. And finally, we've got the US-Canadian Forex pair up 0.54%. This puts it at $1.0062 pips. Not a bad week, considering the amount of uncertainty that we've had throughout the week. While looking at some economic reports, the one report that seems to jump out the most is our jobless reports. We can see that it came in at 341,000 versus the market expectations of 365,000. This is a good thing because it means that we had fewer jobless reports than we would have anticipated. Obviously, something that did help with the market's economy. While looking at the S&P 500 on a daily chart, you can see very clearly the trading range that has been put in place since the beginning of December. You can see that it's flattening out with some psychological resistance around 1525. You could also see that it's coming right up against support, which is at around 1520. Things have gotten very flat, so we'll be very curious to see what ends up happening next week. Though we do know that the MACD is declining bullish, and with the black line down below the blue line. Beyond that, though, we can see that despite the gains that we've had throughout the week, we can see that the MACD has slowly been trading downward. This is an early sign that the markets are losing momentum and losing their energy. Looking at the S&P 500 on the weekly chart, you can see that although the gains weren't significant, they are still slightly above the previous week. And that's been the case for the last several weeks, with our most significant gain coming last week after breaking up some overhead resistance 4 weeks ago. All in all, the S&P 500 has had a great run, but because it's so overbought, we need to see a pullback so that things can get back down to a normal trading range. This is further emphasized when you look at the S&P 500 on a 5-year chart. You can see that we have not been this high in the last 5 years. We're definitely in some uncharted territory, and we need to make sure that we're trading with extreme caution due to the amount of volatility that's going to come from this. While looking at the TSX, you can see that it's not doing nearly as well as the S&P 500 is. We've got clear resistance overhead, currently at 12,800, with some support around 12,550. Now the MACD is declining bullish, and with the black line down below the blue line. With the TSX, we can see that we're just inches from crossing into bearish territory. If we do cross into bearish territory, this will be the first time that it's been traded bearish since the middle of November. In fact, the last time that actually dipped into the bearish was at the beginning of November. So we've definitely had a pretty good run since then, but since the later portion of January, we've definitely seen some declines. While looking at the TSX on the weekly chart, you can see the tight trading range that it's been trading in, and you can see that it is up against some support. Though, as mentioned before, we can see that we are starting to break down below support levels, so it's just a matter of time before we break down below this support level as well, especially if the MACD ends up bearish. You'll find that support levels are not nearly as strong as they would be in a bullish market. If you look at the TSX on its longer scale, 5 years, you're going to see just where it's sitting compared to the last 5 years. You can see that it's definitely not anywhere near where the S&P 500 is. Although it's had a great run, and although it's still trending upwards, there is definitely a lot more that needs to happen before we reach our 5-year high. It looks like we'll be finding some resistance levels at this previous cycle here, with many more cycles that we can connect to on the way up from there. While looking at the volatility indicator, despite the slight gains that we had, and despite the wishy-washy trading that we had, the Dow Jones is still down 4.82% from last week. That's the Dow Jones Volatility Indicator. That puts it at 12.45. Now we know that the Volatility Indicator can safely trade between 14 and 16, as you can see throughout September and October. It's even traded quite comfortably between 16 and 18 throughout November and December. So we really don't have to be too concerned about this indicator working itself back up to the 16s or even the 18s. But by seeing that increase, we are going to see that the markets are preparing for a little bit of a shift, where volatility will be a little bit higher. Traditionally, the volatility indicator isn't to be too concerned over until it reaches into the 30s. But given the fact that we've been trading for so low for so long, even that jump into the 16s will play a small part in some volatility. All right, so we're just going to take a moment here to take a look at some great picks that we had throughout the week. The first one we have here is from the 11th, SKYW. This was on our basic watch list. Using some advanced disciplines, you'd be able to see that we've reached a 2.71% possible increase from the day that it showed up in the watch list. Now that was in about 2 days, and that was from using our buying disciplines, which you can see on this chart right here. We chose to purchase between the 5 EMA and the closing price due to the fact that the EMAs were aligned and due to the fact that the 5 EMA was rising and bullish. By getting in at 12.93 here on the 11th, and then taking our profits a couple days later, we would have had that 2.71% rise. Other things to note, although the company itself was bearish, it was trading with the black line over top of the blue line. We also had some nicely rising stochastics and RSIs, and a nice increase in volume. All of these things together made for a great buying opportunity. For our customers who are taking advantage of our ITL picks, you're going to see that we had a great pick show up on the 12th. It generated a 1.20% profit in 2 days. Now the nice thing about these ITL picks is that the users or the customers themselves don't need to do any technical analysis. The buy-in price as well as exit prices are all predetermined by our team analysis. As a result, our customers simply plug in the information, plop it into their calculators, and go ahead and transfer that information over to their brokers. If you have any questions about anything that we discussed today, whether it be our ITL picks or our MWA disciplines, feel free to contact us at either the email address or the phone number which is listed below. We always make sure to get back to our customers within 24 hours. And finally, although we strongly encourage our customers to go out and experiment and play with new disciplines, we encourage you to always fall back and compare things with your underlying trading disciplines. Never deviate away from the disciplines that you've put in place and that you trade from. Ultimately, though, any trading decisions that you make are your own, so make sure that you're trading with caution. And with that said, this has been the end of week market review for Friday, February 15th, 2013. Ciao for now.